Bitcoin is a new kind of money. It is not like the dollars or euros you keep in a bank. It is completely digital. You can think of it as money for the internet. Bitcoin allows people to send value directly to each other. There is no bank or government in the middle to approve the transaction. This is a very powerful idea. It means that for the first time, we have a financial system that is open to everyone. It does not ask for permission. It simply works based on rules written in its code, accessible to anyone who wants to participate. The system is powered by a technology called blockchain. Imagine a public book of records that everyone can see. Every time someone sends Bitcoin, a new entry is added to this book. This book is not kept in one place. It is copied across thousands of computers around the world. This makes it incredibly secure and almost impossible to change or cheat. Because so many people hold a copy of the records, the network itself agrees on what is true. This shared agreement, or consensus, is what gives Bitcoin its strength and makes it a trustworthy system without needing a central authority to manage it. This idea of decentralized money is revolutionary. Traditional money is controlled by central banks. They can print more of it whenever they decide to. This can lower the value of the money you have saved. Bitcoin is different. It has a fixed supply. There will only ever be 21 million Bitcoin created. This limit is written into its core programming. It cannot be changed. This makes Bitcoin more like a digital version of gold than a traditional currency. Its scarcity is one of the main reasons people see it as a potential store of value for the long term. When you own Bitcoin, you truly own it. You hold the keys to your money. In the traditional banking system, the bank holds your money for you. They can freeze your account or limit your access. With Bitcoin, you have full control. You are your own bank. This gives you great freedom, but it also comes with great responsibility. You are in charge of keeping your money safe. This shift in control is fundamental to understanding why Bitcoin is more than just a new technology. It is a new way of thinking about ownership and financial freedom in a digital world. One of the most compelling reasons people save in Bitcoin is its potential as a long-term store of value. As we discussed, there is a limited supply of only 21 million coins. This built-in scarcity is a powerful feature. In a world where central banks can create more money out of thin air, causing inflation and devaluing savings, Bitcoin offers a predictable alternative. People see it as a way to protect their wealth from being eroded over time. They are not just buying a currency, they are buying a piece of a finite digital asset, hoping its value will grow as more people recognize its unique properties. Another major benefit is the absolute control it gives you over your own funds. When you hold your Bitcoin in a personal wallet, only you can access it. No bank can block your transaction, and no government can seize your assets without your private keys. This is especially important for people living in countries with unstable political or economic systems. For them, Bitcoin is not just an investment, it is a lifeline. It provides a level of financial sovereignty that is impossible to achieve with the traditional banking system, offering a safe haven for their savings. Think about people in countries with very high inflation, like Argentina or Venezuela. Their local currency loses value extremely fast. What they could buy with their savings yesterday, they cannot buy today. For them, saving in their national currency is like trying to hold water in a leaky bucket. Bitcoin offers a way out. By converting their fragile local money into Bitcoin, they can preserve their purchasing power. It allows them to participate in a global financial system that is not tied to the failures of their local economy, giving them hope for a more stable financial future. Furthermore, Bitcoin is a global and borderless currency. You can send it to anyone, anywhere in the world at any time. The transaction costs are often much lower than traditional international bank transfers, which can be slow and expensive. This makes it a powerful tool for global commerce and for sending money to family across borders. Because it operates on a network that never sleeps, it is always available. This accessibility ensures that anyone with an internet connection can join the network, making it one of the most inclusive financial systems ever created. The most well-known risk of holding Bitcoin is its extreme price volatility. The value of Bitcoin can change dramatically in a very short amount of time. It is not uncommon for its price to rise or fall by 10% or more in a single day. This can be exciting when the price is going up, but it can be very stressful when it is falling. If you need your money on short notice, you might be forced to sell at a loss. This makes Bitcoin a poor choice for an emergency fund. Its price is driven by market sentiment, news and speculation, making it a very unpredictable asset in the short term. Another significant risk comes from regulation. Governments around the world are still trying to figure out how to handle Bitcoin. Some countries have embraced it, while others have tried to ban or restrict it. The rules can change quickly, and without warning. A new law in a major country could have a huge impact on Bitcoin's price and its usability. This regulatory uncertainty creates a layer of risk that is outside of your control. Investors must stay aware of the changing legal landscape, as it can directly affect the value and accessibility of their holdings. Then there is the technological risk. While the Bitcoin network itself is very secure, the responsibility for keeping your coins safe is entirely yours. If you lose your private keys, you lose your Bitcoin forever. There is no customer service number to call and no password reset option. Your coins are simply gone. You must also be careful about scams, phishing attacks, and malicious software designed to steal your cryptocurrency. Managing your own security requires education and discipline. A simple mistake like clicking on a bad link or storing your keys insecurely can lead to a total loss of your savings. Finally, by choosing to save in Bitcoin, you face an opportunity cost. This means that the money you put into Bitcoin cannot be used for other investments that might also grow, such as stocks, bonds, or real estate. These traditional assets often have a longer history and are better understood. They may offer more stable returns or even generate passive income through dividends or rent. By focusing too heavily on Bitcoin, you might miss out on the benefits of a diversified portfolio. It is important to weigh the potential rewards of Bitcoin against the potential gains from other more established investment options. For those who decide to save in Bitcoin, it is vital to do so safely. The most important rule is to start small. Never invest more money than you are willing to lose. Bitcoin should be seen as a high-risk part of a larger, more diversified investment plan. Putting all your savings into Bitcoin is a dangerous gamble. A good approach is to use a strategy called dollar cost averaging, where you invest a small, fixed amount of money regularly over time. This helps to smooth out the impact of price volatility and builds your position gradually without taking on too much risk at once. Securing your Bitcoin is just as important as buying it. Keeping your coins on a cryptocurrency exchange is convenient, but it means you are trusting the exchange with your money. Exchanges can be hacked or go out of business. For long-term savings, it is much safer to use a hardware wallet. This is a small physical device that stores your private keys offline, away from internet-based threats. This puts you in full control of your assets, and is the gold standard for self-custody. Remember to back up your recovery phrase and store it in a safe, secret place. So, who is Bitcoin suitable for? It might be a good fit for long-term investors who have a high tolerance for risk and a deep belief in the technology's future potential. These are people who have already built a solid financial foundation with emergency savings and traditional investments. It is also a powerful tool for individuals living in countries with high inflation or capital controls, as it offers a way to protect their wealth and access the global economy. For these users, the risks of Bitcoin may be smaller than the risks of holding their local currency. On the other hand, Bitcoin is not for everyone. If you are risk-averse, have a low income, or are close to retirement, you should be very cautious. People who need their savings to be stable and easily accessible for near-term goals like a down payment on a house should avoid it. Bitcoin's volatility makes it unsuitable for anyone who cannot afford to see their savings drop significantly. Ultimately, the decision is yours. Educate yourself, understand the risks, and decide if this new financial frontier aligns with your personal goals and circumstances.